welcome and thanks for coming. A bit about me. My name's Justin Owen. I'm CEO and co-founder of REI Master and EasyRes. I've been doing this since 1999, so I've seen a lot of end of months by now. We've got 1,300 clients or so around Australia and New Zealand, and I worked out not that long ago an estimated $2 to $3 billion goes through trust accounts managed by our software each year, so quite a lot of money processed. Yesterday we had Damien present from Savvy Accounting, and Damien's been servicing the industry since 1998. He's owned accounting firms and he's owned hotels style businesses as well. So he was really well placed to be one of the presenters to give us his point of view, the case against bundling. And this morning I welcome Tony, come all the way from Noosa this morning and Melbourne last night. So big effort. Welcome Tony. Thank you very much for coming. Tony's been servicing the accommodation industry for 20 years as a chartered accountant, and Tony and his team specialise in servicing the accommodation sector. Tony's particularly passionate about getting things right from the outset for new entrants and has a very holistic approach to dealing with his clients. He won't just be talking to his clients about accounting and facts and figures. He has very much a business improvement approach with his clients, and he's well known for that. So Tony and his team help clients with structuring, due diligence, audit, acquisition, and a whole range of other services. And Tony is really well known for his industry peers and works closely with financial institutions, legal advisors, sales brokers, valuers and the like as well. So for Tony's case for bundling, I think we would agree that he's really well placed to deliver the content as well. So just to reiterate, what is bundling? Bundling is the grouping of traditionally segregated fees and charges with fixed dollar amounts into a single or only one or two percentage items that are traditionally much larger than your 13.2% or 8.8 or 8.25% amount that you would charge to your owners, and incorporates all or most of your fees and charges to your owners. We talked yesterday, why split this into two sessions? And I just want to reiterate that both Tony and Damien have a high amount of respect for each other and have worked closely together over many years. All three of us felt it was best to give today's presentation and yesterday's presentation fresh air because both guys are very passionate about their points of view. They are saying that you should run your business this one way or the other. And so in doing it this way, we've got the ability to have that clear air for the presentation. Yesterday we talked about the winner. Who's going to be the winner? Is bundling going to be the winner, or is to stay unbundled going to be the winner? And it's really important that we know that there are no winners in terms of that point of view. The winner is you if you take the time to evaluate your business and find the best approach for you. So to bundle or not to bundle? We'll always remember when we're running our businesses that the owners are at the core of what we do. But we have to remember that without your business operating smoothly, strongly and profitably, that the owner's assets are at risk. And of course, property management's not a community service. You guys are there to make a profit. So yesterday and today we've got some highly qualified people talking about how your decisions on your structure can affect your profit and of course your sell price as well. So today we have a chance to look at our businesses and consider our ongoing profitability, our owner outcomes, changing market conditions and the implications for selling. And of course I've got my disclaimer there that today's session is general advice only and doesn't consider your specific circumstances. And for information regarding your specific circumstances, please contact your accountant or professional advisor. And without any more from me, I'll welcome Tony. Thanks very much for coming, and I'll load up your presentation. Welcome, Tony.
Okay, thanks Justin, and good morning everyone. Again, my name's Tony Rossiter and I'm a Director of Holmans Accounting. Firstly, I'd just like to thank REI Master for the opportunity to come along and present to you all this morning, and thank you all for taking the time out. I know you're all very busy and with your business and so on, particularly at this time, and appreciate you taking time out to listen for the case for bundling. So firstly, a quick overview of what I'll talk about. Justin gave us a good wrap at the start, so I'll just briefly talk about Holmans and our background and my background, and I guess what qualifies me to talk on the topic of bundling. I'll then run through a bit of the history, what led us to a position where we felt it appropriately to be forming a view on the concept of bundling, and also advising our clients on processes for bundling the charges within their business. Certainly it wasn't something that we dreamt up late one night. It was a process, and I'll go through that process and the reasons for coming to the conclusions that we have come to on bundling. I'll talk a little bit about some of the risks that exist in the business and why bundling is a potential solution for those issues. Which of the services or the charges that you're currently charging are eligible or ideal for bundling, and perhaps which services you may choose to bundle, but with caution. So we'll talk a little bit about that. How to work out practically how to work out the bundle and the bundle percentage and how that works. The process. We've now done dozens of bundling exercises with our clients, both in holiday letting and permanent letting, with great success. And I'll talk about some practical examples that we've worked through with clients and what some of those outcomes have been. Ultimately, what the impact of bundling might be on the profitability of your business when you go to sell, and then the value of the business for sale purposes. And we'll run through a practical example, and I'll go through a few other little tips and traps. So I expect I'll be presenting for about an hour, and I believe there's plenty of time for questions at the end of the presentation. Understand most of you have listened to Damien's presentation yesterday. I haven't had the benefit of that. I've tried to predict what Damien may have had to say in the case against bundling, and tried to address that as you would in a debate. But no doubt if I've missed anything, it'll come up in question time. So sit back and relax. Hopefully enjoy the show. You'll all have access to one of our folders with a bunch of material there on Holmans, what we're about. In there is our contact details. And by all means, if you'd like to make contact, get a copy of our slides, feel free to shoot me an email. Okay, so first up, just to, without boring you, slight repetition on what Justin had to say. I'm a chartered accountant. It's now over 22 years I've been working in the industry. For the last 16 years, I've been specialised in working with clients exclusively in accommodation. Similar, I believe, to Damien, we've chosen accommodation to be our area of specialisation. I don't work with any other non-accommodation clients. The vast majority of my clients are people such as yourselves operating management rights businesses. We do look after some hotels, motels, service departments as well, but our main focus is on management rights. Our head office is on the Sunshine Coast, but what I tell people is my head office is in the boot of my car, in that I travel quite a bit around, particularly around southeast Queensland, I believe our firm has more management rights clients on the Gold Coast than we do in fact on the Sunshine Coast. We're down here a lot because there are a lot of management rights down here. A bit like Damien, you know, we've practiced in this field for many years and have a deep understanding of how management rights works from an accounting perspective. So we have many clients in the field, and I have a team of accountants who look after our clients' usual accounting needs. So we prepare financial statements, we prepare tax returns, we prepare business activity statements and so on, all the things you would normally expect from an accountant. My role is a little bit more specialised in that the vast majority of my time is spent on the road dealing with clients who are perhaps looking to sell their management rights or indeed looking to buy. I do a lot of verification work and work quite closely with, particularly with the people at REI Master on that. Finally, over many years now, I think it's over 6 years, Holmans has acted as the financial controller for REI. So we have a very close relationship with REI and Trevor and the team, the senior leadership team at REI. We're regularly attending and presenting at REI events and indeed networking with the legal panel who advise REI on a range of matters, including some of the matters which I'll talk to you about, which led to our conclusion on bundling. In fact, it was now over 3 years ago that we first started talking about bundling at a REI presentation. We did a roadshow up and down the East Coast. We got up to as far as Port Douglas, running seminars talking about this concept of bundling at that time. And that was in conjunction with Trevor at REI and John Marnie, who's also quite a strong advocate of the concept of bundling. Important to understand, and I think Justin made the point, I'm not suggesting that every property in every set of circumstances should bundle. What I'm suggesting is every property in every second set of circumstances should consider whether bundling is an appropriate outcome for them. Again, I'll talk to some examples where we've worked with clients and the successful outcomes that we've achieved. Your results may be different. You may decide not to proceed. I'll talk about some of the resistance we've had from clients who haven't wanted to bundle and what we've done to overcome that and successfully achieve a positive result for them and for the relationship they've got with their unit owners. So firstly, to the history of bundling, really what got us thinking about this concept was the change of legislation. It's amazing, it's over 3 years now since the legislation changed, out with PAMDA and in with what we now lovingly refer to as POA, or the Property Occupations Act. That new legislation came in on the 1st of December 2014. And you may recall there were a number of changes. The most obvious one were the changes to forms. We no longer had Form 20As and we were introduced to Form 6s. The detail within the forms was pretty much the same, but the format looked a little bit different. And all of the stationery or the forms, the application for a licence or notifications to the Office of Fair Trading and so on, they all changed slightly. But the underlying tone of those applications was very similar. There was some changes to licensing requirements, the ability to live off-site under a restricted licence, and a number of other procedural and administrative changes, including getting rid of the motor dealers out of our legislation and off into their own legislation, which was no doubt a good thing. But one of the key changes, which was largely overlooked, was removing this concept of having a cap on commissions. Okay? And most operators wouldn't have even been aware that there was a cap in place. They would have bought their management rights business. If it's holiday, they would have bought into a business that was charging 12% plus GST as their rate of commission, and they would have continued with that same charge without much of a thought. If it was permanent, the commission's actually 5%, and then you charge a management fee on top of that, 2.5% or 3% in most cases. And you would have inherited that when you bought the business and not thought any more about it. But the reason those rates are 12% and 7.5% or 8% in permanent is because there was, under the old legislation, a legislative cap on how much you could charge for commission. That cap was removed when the new legislation introduced. And conceivably, from the 1st of December 2014, you could have doubled your rate of commission from 12% to 24% and legally done so. Good luck persuading your owners that you can get away with that, but certainly legally you could have done that. And that concept then opened the doors and I guess our minds and our thinking to looking at how we do charge for the services that we provide in the industry and how relevant are they to the current status of the industry, and does this removal of the cap provide some opportunity to perhaps go back and revisit what we're charging, particularly in conjunction with having this requirement over time to move from the old PAMD forms to the new Form 6. What a great opportunity to look at how we're charging, look at if there is a better way that produces better outcomes and roll that out. So that was, I guess, the initial point where we started thinking about bundling. In addition, and around that time, there was a lot of talk in the media about surcharging, merchant fee surcharging. And it's been in the media probably for 10 years or more. That is, the government making noises about prohibiting surcharging. And the reason that the government was making those noises was largely due to profiteering that was occurring in the airline industry, in the taxi industry, and other industries like ticketing companies and so on, where essentially you're forced to pay for a service using a credit card. You can't buy an airline ticket, I don't think, without using it, or almost without using a credit card. And once you've purchased the airline ticket, you pay the fee for the service, and then you go to close out that transaction and bang, you're hit with this merchant surcharge, which is exorbitant and does not relate to what the actual cost to the airline for processing that credit card transaction. So that's what the government was banging on about and what they were concerned about and have been for 10 or more years. But there was never any legislation introduced on it until recently. A bit over 12 months ago, there was a new regulation introduced. In fact, it's going back a couple of years now. And the regulation basically said that you cannot make a profit from merchant surcharging. And if we think about in our business, particularly in holiday management rights, we typically have a fee that we charge for processing a credit card transaction. And on average, I can tell you it's 2.5% plus GST. And I can also tell you, on average, your cost, that is the fee that the bank charges you for processing that transaction, on average, is about 1%. So you're actually making 150% markup or profit on that transaction. So right in the crosshairs of what this legislation is looking to prohibit. So the regulation came out. It was actually released on the 1st of September 2016 and applied to large businesses, turnover in excess of $10 million. So typically it wasn't applying to management rights on that date, but we knew what the regulation was, and we felt that initially at least that it was going to apply to the management rights industry, and we're in for some rough times, or re-engineering our business and potentially losing what can be quite substantial. I have clients who are and were making profits of $50,000 or more from credit card surcharging. And if you think about what that means in terms of a multiplier of profit when you go to sell your business at 5 times, that's 250,000 in value. So it's a big deal if we're going to lose it. Fortunately, and the good news is that we've since had legal clarification on that regulation, which says that the regulation does not apply to the relationship that a management rights operator has with their unit owner. You understand that relationship is a relationship between a unit owner and yourselves as their agent, whereas the regulation is designed to prohibit profiteering on transactions between a merchant, which you kind of are, and their customer. Okay, so it's kind of splitting hairs, but basically the ruling that we got, the legal ruling, was that it didn't apply to our relationship, okay, that we have with the unit owners. So we're happy to continue to charge our 2.5% or sometimes 3% for merchant fees and make that profit, right? The reality is that wasn't the case. Although the regulation didn't apply, what we found when the legislation came in on the 1st of September, and we felt it was going to be the case, unit owners are reading the paper saying, well, hang on, I shouldn't be paying any more than the cost, and the cost is about 1%, and they pick up their monthly end statement and they look at the charge that they're paying, and they get their calculator out and work out that their property manager is actually paying them 2.5%, and they get on the phone. And we've seen that from our clients reporting cases where they've had disgruntled unit owners telling them that what they're doing is illegal and so on. So although technically the regulation doesn't apply to that relationship that you have with your unit owners, practically it creates an issue. The unit owners don't know that. They're already in many circumstances wary of the charges that we're charging them, and it just gives them an excuse to have a whinge. So that was the second big thing that really in quick succession popped up that raised our attention to this concept of bundling. Wouldn't it be great if we just removed the merchant fee charge that we have from our schedule of charges? And it was no longer there, the problem disappears with it. So that was an important development. The next one is advertising. And advertising has been an interesting concept in management rights, certainly in my 16-year experience in management rights. Probably 16 years ago, when I look at and think back to the relationship my management rights clients had with their unit owners, the general theme was that advertising money, that belongs to the unit owners, and I'm collecting it from the unit owner, and I'm going to keep it in a separate fund for the unit owner, and I'm going to spend it on their behalf, and if they ever want to know what I spent it on, I can show them, and if they ever want to know what's left in the fund, I can tell them, and when I go to sell the business, I'm going to take the balance of that fund and I'm going to hand it to the new purchaser. Okay, and that was the common theme 16 years ago, no question. Many operators would actually hold the advertising money in the trust account. So it sat there in its own separate ledger, like that's not our money, that's in trust for our unit owners. Or indeed they would set up a separate general bank account called their advertising bank account and put the money in there and account for it separately. Over the years, that view has changed and evolved, and nowadays the vast majority of operators form the view that it's their money and they can do what they like with it, but they're still a little bit concerned that maybe the unit owners might ask us about that and what do we do about that, but really we want to keep the money and we don't want to give it to the purchaser when we sell the business. That's our money, and that's the general outcome we see today. And really the confusion around that concept of how to deal with advertising money stems from the old PAMD Form 20A. And if you can picture that form, there's an item in there, item number 7, that talks about expenses incurred on behalf of the principal or the unit owner. and it says, for example, advertising. And the vast majority of operators would see that and see advertising and say, great, that's where I put my advertising levy, and write 2.5% plus GST in that box. And by doing that, essentially what you're saying to the unit owner is, I'm going to collect this 2.5% and I'm going to keep it on your behalf, and I'm going to expend it on your behalf, and implied in that is if there's any surplus, I'm going to give it back to you. Okay, and that was the legal interpretation of filling out that box. I believe in the new Form 6, the format of that particular section is identical, but it's actually item 8 in the new Form 6. And the best advice, the John Marnie advice, the ARAMA advice is, don't write anything in that box other than refer, attached, a next schedule of charges. And you put your advertising levy in the schedule of charges. Okay? By doing that, legally you have no responsibility, no legal obligation to account for that money for unit owners. But what you still have is this industry assumption that's been developed over the years that perhaps that is the unit owner's money. And rightly or wrongly, us accountants look at advertising and say, well, we're going to assume that money is going to be spent on behalf of the unit owners. We're going to assume there's no profit margin in advertising, and we're going to take it out of the P&L. So when you go to sell management rights, you cannot benefit from any profit that you might make in advertising. So that's a bit of a history lesson on advertising, how it's evolved. And there's still a lot of confusion out there about both advertising and the merchant fees. Another good reason to consider bundling, particularly given what we have observed over the last 3, 4, 5 years, is the profit margin on advertising getting greater and greater and greater and greater, to the point where the vast majority of my clients running management rights are making significant profit from the advertising. Why are they doing that? My view on that is simply they don't have the same areas where they can spend money on advertising that they perhaps had 5 or 10 years ago. There's no more value in putting an ad in a newspaper that you might have done 10 years ago to advertise your complex. You just wouldn't do it. All the advertising is online. It's relatively cheap compared to what was print advertising, newspapers, magazines, perhaps sponsorships and so on. Today it's all about the internet. And guess what? By advertising on the internet, essentially you're going up against and head to head with the big boys, the online travel agents. And if you Google accommodation and go back to your property and Google accommodation, Gold Coast or even in your area of the Gold Coast, and have a look at what comes up, accommodation in your area. And you'll see the first page is just full of paid advertisements. Booking.com, Expedia, What If, TripAdvisor, Trivago, and it goes on. And they're all paying a lot more money than you can afford to get their Google rankings. I remember 5 years ago, the great initiative was, I'm spending money on Google AdWords, and that's going to increase my ranking and increase my business. I don't believe there's a lot of value in that anymore. Really, better value is probably talking to the likes of Booking.com and Expedia about how you can improve your ranking on Booking.com and Expedia, because that's where all the bookings are coming from, and then a strategy around directing those bookings to direct bookings next time round. But that's for a different topic. So the bottom line was, our clients were spending money on updating their website and their web presence, a bit of IT, managing their rates. They'll spend their time and so on, but they were increasingly making a profit from advertising, which they were getting no value for when they went to sell. Again, another reason to consider bundling advertising. There's also a number of income streams in your business that we haven't seen income increased over time. If you look at your property, you know, it might be 10, 15, maybe 20 years or more old, and some of the charges in there might be the PABX or the Foxtel charge or the postage and petties charge, hasn't been increased for 15 years. And the reason I know that is because REI keeps, or does a survey periodically and looks at what charges people are charging, and a lot of those charges just haven't gone up. And when I think about why those charges haven't increased, my conclusion is our natural resistance to not want to engage with unit owners to increase those charges. You know, where typically, you know, if I talk to my clients and I ask them, when did you last put up your charges? Oh, 2 or 3 years ago, or oh, I haven't put them up since I bought it, but we're going to do it soon. We just don't want to have those conversations with unit owners, particularly on fixed charges where you've physically got to get the unit owner to sign up to a higher charge, as opposed to a percentage charge where, you know, the rate of commission will always stay the same. And the way you increase your revenue from that particular service is by increasing the revenue of the business. So that's a bit of a history. Yeah, some of the risks that around that are you know, the competition that, you know, we've got with outside agents. You know, big concern in a number of properties is, particularly permanent letting, is losing your letting pool to outside agents. My view is by bundling, and I'll go through examples shortly, you have the opportunity to differentiate what you're doing in your business to the outside agent. Typically, if you think about it, if you've lost units to outside agents, there's two main reasons. One is you have a dispute with the unit owner, which is happens. The other one is over price. The unit owner is price sensitive. They're approached by an outside agent. Hey, I'm paying 8% commission on my permanent letting here, and there's an agent up the road. I have a view that that agent's going to do the same job. They're going to do it for 6%. I'm going to save some money. I'm going to go to the outside agent. If you're bundling your charges, and in that setting, perhaps bundling in some maintenance that you might be doing, regular maintenance on the property, or smoke alarm testing, or whatever it might be. You might be looking after the courtyard gardening. You might bundle in letting and reletting fees, such that you're no longer charging 8% plus all these other charges that the outside agent is going to charge anyway, and probably going to charge more, particularly for the minor maintenance where they're going to get a tradesman in with call-out fees and so on. If you can bundle that all in, you're then differentiating what you're doing from what the outside agent is charging. And so it makes it far more difficult from a unit owner to work out, well, you know, is it actually saving me money going to this outside agent? Again, you're probably all aware, and hopefully all REI members, and aware of all the material REI has produced on helping you with those communications with unit owners. The next point in relation to the fixed rate charges I mentioned earlier, for those of you who are REI members and haven't seen the cost and charges survey, jump onto the website. You can download the last 3 or 4 surveys and have a look at what's happening in the industry. Benchmark what you're doing in your business to what the industry average is for a whole range of different charges. Quite valuable stuff. I've spoken about the advertising. My view is, if correctly presented to unit owners, that is, if you've filled out your Form 6 correctly and your communication to the unit owners correct, that advertising money is absolutely your money, and it's no different to any of the other charges for the other services that you provide. And my view is, and it's the contentious view when it comes to industry accountants, my view is it forms part of the profit of the business as well when you go to sell. The credit card income, it's not legally binding on us, the regulation, but best practice absolutely is to do something about it. Similarly with the internet income, telephone and PABX. Okay, so that's a bit of an overview. of the history of bundling and what developed myself and others to form this view that bundling could potentially produce a positive outcome for our clients operating a management rights business. We've now worked with dozens of our clients who have successfully implemented a bundled approach to their schedule of charges. Interestingly, many of them started out the journey with a real resistance to the practice, and a very, very common response from our clients was, my unit owners would never accept a change like that. And the reality is we've got the change over the line, and in many cases 100% of unit owners signed up to a bundled schedule of charges. And I'll explain how shortly. The majority of the bundling that we've done is what we call a simple bundle. We'd always want to include the credit card charge fee, the 2.5% on average, for reasons I've just explained. We'd always want to include the advertising, and they're the big two. And typically we suggest throwing in other charges which currently you're charging and you probably don't even know why you're charging and what you're charging for. If you think about postage and petties, when was the last time you sent a piece of mail in the snail mail? What is a petty that we're charging for? Who knows? And you know, it was $6 a month, you know, per unit owner 10 years ago, and I'm still charging $6 for the same thing. Why not get rid of that? Modernise the schedule of charges, make it relevant to the services that you're providing to your unit owners. If nothing else, call it a communication charge and tell the unit owners it's got to do with your cost of maintaining your ISP or whatever, your time in sending email communications and so on. But don't call it postage and petties. It's redundant. PABX, similarly, is becoming a redundant concept. When I started in the industry 16 years ago, telephone income was a substantial income stream in many management rights, and today it barely exists at all. And the value of having a PABX system likewise is coming into question. I'm aware of new buildings, new developments that are built and set up without a PABX system. I'm aware of clients of ours who have, in conjunction with the body corporate, decommissioned the PABX system. Currently, have a look at what you're charging in holiday. You know, it might be $25, $30, $40 a month per unit owner for PABX system that's really not being used, or will go out of use in the near term. Similarly with the internet, another service which is evolving over time. Think about in your business with your schedule of charges, what are you charging right now that's either redundant or going to become redundant, and take the opportunity today to bundle it and continue for the business to get value from that particular charge, because you're going to risk losing it if you don't do something about it today. So that's a simple bundle. At the other extreme is a 100% bundle, and we have had some clients do that, where essentially they've said, listen, we're going to throw away this schedule of charges and we're just going to charge you 1% amount as a percentage of the gross income or the gross turnover of the business. Okay? Normally we see that in new buildings, and in fact the majority of the new properties that I've worked on are introducing a single percentage bundle. On average it's around 45% to the property manager, 55% to the unit owner. Important to understand how GST fits in there, and in my view important that the unit owner gets at least 50% if you're going down that route. It does have some risk, and I've put the line there, you know, be careful of cleaning and linen. Right now in holiday setting, cleaning and linen is a great revenue source for management rights operators, and a great source of angst for unit owners. And you think about in tough times where your tariff is under pressure in the the quieter months in February and May and so on, where your tariff's down, you're still charging for your clean, you're charging for your linen, you're charging your commission and your other charges, and you'll find you're getting far more than 50% of the revenue, and the unit owner is getting less, and that really underpins the profitability of your business. If you bundle all those charges in together, then in quieter months, your revenue is going to drop relative to if you weren't bundled and were charging for cleaning and linen. Not to say you shouldn't do it, but a word of caution: if you've got, I guess, a negative view on where the industry's going and where you're building your property's going in terms of revenue, then you wouldn't bundle cleaning and linen. If you're optimistic about your ability to influence the profitability of the building you're operating, if you believe you can increase the turnover, then absolutely, you're going to make more money for yourself and for the unit owners by bundling cleaning and linen. So, that's one of the, I guess, personal decisions that you'll each have to make relative to your own property and where you see your influence on improving that property going forward. So to the process then of calculating the bundle, as we discussed, step one, choose the charges that are appropriate to bundle. What we then do when we're working with clients is identify the gross turnover of the property. So on the right hand side, if in the example, if there's $1 million turnover in the property and our credit card income is $25,000, all excluding GST, then 2.5% in respect of credit card charges could form part of the bundle. For advertising, in this example, it's 3.5%. The postage and petties is half of 1%, and the PABX system is 1%. If we add all those up, we've got a total bundle percentage of 7.5%. Again, a word of caution. If we're bundling like that, you may choose to go back over a number of years, 2 or 3 years, and do that calculation, so you're averaging out over several years and not just relying on the last 12 months, which may not be indicative of how the property is going to perform going forward. But that's the basis of working out the percentage. Every property is different, and there's other complexities around things like repairs and maintenance that you might be charging. How does that go into the bundle? That might vary from one unit owner to the next to the next. We have had some clients have a different bundle percentage for every unit owner. Again, that's adding some complexity. You may not want to go there. But a simple bundle, the ones we've worked on average, are around 7 to 8% and tie up in holiday letting, the advertising and the merchant fees. So suddenly your schedule of charges, and I don't expect you to read that, on the left hand side for those in holiday letting, that format would be quite familiar to you. It's a full page or a page and a bit of different charges. Essentially you cut it in half by bundling a bunch of those fees in together and simplifying the schedule to the owners. Can you imagine if you owned a unit in a holiday complex and for the first time you're presented with this schedule of charges and it just goes on and on, fee. By simplifying that, surely it's going to have a positive impact on your relationship with your unit owners. If you go to 100% bundle, it looks even better. It's really one line item, incorporating all the charges. In this example, we've called it a management and service fee. Call it what you like, but importantly, you don't want to make reference to advertising or merchant fees. You just want to call it a service fee. One I like is administration and promotion fee, where it's a simple bundle, 7 to 8%. Explains what you're doing, but doesn't connect it to merchant fees that might come under scrutiny or advertising that might come under scrutiny. Again, not to deceive our unit owners. We're not proposing anything illegal. It's really about redesigning the way we charge and the relationship that we have with our unit owners. So Outlining it slightly differently, the process that we've developed with our clients will involve that calculation of the bundle percentage. What we've found has worked really, really well, where clients have come to us and said, Holmans, can you help us with this process? We've developed an approach whereby we actually write a letter of advice to our client. Dear client, thank you for your inquiry about the concept of bundling and how to deal with the changes in your merchant fee surcharging. We've acted on your behalf and done certain calculations and worked out what the cost to your unit owners is of providing those services. We've calculated that that represents a percentage of 7.5%, and we recommend that you introduce a bundling percentage that will not disadvantage your unit owners, and we sign that letter off to our client. Our client then takes that together with, often if they haven't already transitioned to Form 6, perhaps they'll use it as a reason for approaching the topic with their unit owners. They'll send out a new Form 6. Dear client, my auditor's been in touch with me. They've advised me I now need to upgrade to Form 6, version 5, the current version. Here's the new Form 6. By the way, there's some changes in the industry. I've asked for some advice from my accountant who's written to me. Here's the advice. I've altered the schedule of charges in accordance with my industry accountant's advice. With some clients, we've even got them to attach a letter, an article that John Marnie wrote on the issue of bundling to help clarify it to unit owners. They send that out to the unit owners as a package, and it's been extremely successful. And as I say, in most cases, 100% take up. Often there'll be one or two, as you know, in your letting pool that's hard to deal with. And that's a negotiation. You're always going to have one or two. But through a negotiation, often you can get them over the line. Certainly, there's an opportunity if there's one holding out where you might discount the bundle percentage a little bit. Often, right up front, you might offer to discount the bundle percentage. Remember, you're removing a lot of complexity from your world. You're removing the controversy around the merchant fees. You're potentially accessing profit in advertising, which is going to increase the value of your business. So you're happy to provide a bit of a discount to unit owners. So you might even write to the unit owners and say, well, Holmans have done this calculation. They think the bundling percentage is 7.5%, but because it simplifies my world and makes my administration easier, I'm prepared to offer it to you at 7%, a 0.5% discount. And that tends to get them all over the line. They're in no worse position as a result, and in fact, they're in a better position. Once you've got that bundle percentage agreed to, signed up on the Form 6 annexure, Form 6 completed correctly, it's then a matter of working with your software. REI Master is well placed to be able to handle and calculate the bundle percentage and manage that transition. So what are then the impacts on the profit calculations? How do we present the financial statements? And this is really, I guess, a window into my world and what my thinking was in developing this concept and having to pitch it to other industry accountants. How do we go about presenting a bundled profit and loss, particularly if it's prepared for sale purposes? And what happens if we do that and we do it in a year where we've bundled partway through the year and we want to sell? How does that look? And that created some complexity and probably, to be fair, turned off a number of industry accountants to say, oh, this is all too hard, that's going to get too complicated, let's just go back to the old system and stick with that because that's what we know and we know that works and we'll just continue down that route. So, if we can then look at a practical example and hopefully from that it'll explain how we go through the process and what it ultimately might mean in terms of value for your business. So hopefully you can see those numbers. So this is an example of a profit and loss for sale purposes, initially just looking at the items that were bundled. So in this case, we bundled in postage and petties, telephone, PABX, advertising and merchant fees. We're doing a P&L for the 12 months ended 30 June 2017 for sale purposes, and we started bundling on the 1st of November 2016, so just after the merchant fee legislation came in. So in the P&L, we're actually operating under the old system for 4 months, and under the new bundled program, after we've successfully converted all our unit owners over to a bundled set of charges, for 8 months. And so in this slide, we're looking at how that would be reflected in our profit and loss statement. The first item is the combined bundled fees, the 7.5% of turnover for the most recent 8 months of trading. That comes in as income. We've still got to deal with the income in the first 4 months of trading. There was merchant fee income, and that's still legitimate income, and so we include it. For the first time, in my view, we also include advertising revenue in a P&L. Okay? Had we not bundled, again, accountants, including myself, do not include advertising in a P&L. But once we've successfully bundled, essentially we've got authority from our unit owners to charge a bundle which incorporates fees which include what was the old advertising levy. So the advertising levy comes into the P&L for the first time, just for that period of unbundled at the start of the period. We bring in the postage and petties, we bring in the telephone and the PABX income. So total combined non-bundled, bundled income for that 12-month period is $89,000. You can see why accountants are starting to get a little bit anxious about how this might work. We then take off expenses, the merchant fees, pre and post bundling, the advertising pre and post bundling. In terms of postage and petties, really, and PABX if we own it, really there's not a lot of expenses. So you know, the merchant fees and the advertising are the main expenses. We've brought in the advertising income for the pre-bundle period, so we need to bring in the advertising expense. So we're disclosing 100% of the advertising costs for that period. That leaves us with a gross profit from that bundled P&L of $72,000. The next slide, hopefully you can see that on your left-hand side is how the rest of the bundled P&L would look. So we've got the bundled income and expenses. We've then got other non-bundled income. In this example, $195,000. We take off then operating expenses, which are $98,000. We're left with net profit of $169,991. If we go to sell, I'm assuming we sell at, let's say, a 5 times multiple, that puts a value on the business of just under $850,000. If we take that same P&L unbundled and simply exclude advertising, and these are real live figures from a client of ours, they were making $37,000 profit from advertising. So in a non-bundled P&L, they wouldn't include that. And their net profit would be $132,000. At 5 times multiple, the value is $660,000. The difference between a bundled value and a non-bundled value is $189,000. So very substantial. And this is real life stuff. We've worked with clients who've been through this process and successfully sold their business. I've prepared P&Ls on this part year bundled, part year non-bundled, and presented them out to the market. Other industry accountants have reviewed our P&Ls. Initially, they had a question or two about it. They've accepted our P&Ls and the sales have gone through. The banks have accepted them. The valuers have accepted them. So that's one outcome. The most notable outcome that we've come across so far was an increase in value from bundling of over $300,000 to the value of the business. Importantly, as I mentioned before, the starting point and the biggest point of resistance is this fear we have of our unit owners of upsetting the apple cart. My unit owners won't accept this. I can tell you, your unit owners are no different to anyone else's unit owners. They may have been, had a different history and a different journey to get to where they are, but they're individuals, they've got an investment, they want a return on their investment, they want you to look after their property, they don't want to be ripped off. And so the approach, in my view, is the same in every case, irrespective of the relationship. So it's important that you highlight the benefits to the owners. For you, the opportunity comes if you haven't already converted all your letting pull over to Form 6. And I know, out of everyone in this room, there's a good percentage of you who haven't done it, because I'm out there on the ground doing the verifications. I see what agreements operators have got with their unit owners, and invariably there's still many that have got the old PAMDA 20As in place. So if you're considering bundling and you've still got 20As in place, great opportunity, get them all onto Form 6. If you've already got some on Form 6, perhaps suggest to them that they're on one of the earlier versions and it's time to upgrade to the current version 5 Form 6 as a reason for instigating the process. There'll be a simplified schedule of charges. The benefits speak for itself. Having a far simpler process is far less likely to create annoyance and angst with your unit owners. You may be able to discount charges. As I mentioned before, it might be 0.5%, but everyone appreciates a discount or a bonus. And that's probably by far and away one of the biggest leverage points. You're happy to give that discount because you're already benefiting. You can see the benefit in profitability and indeed in value that you're getting. So give a bit back to your unit owners to help get it over the line. The next point is that by bundling, to a degree, you are aligning your outcome from the business with that of the unit owner. And I touched on it earlier with cleaning and linen, and again a word of caution around those, but even with some of the other fixed charges, irrespective of whether there's one guest or at 10% occupancy or 100% occupancy, you're going to get those fixed charges. The PABX, the Foxtel, the postage and petties, whatever they might be. They're not overly significant, but they start to add up. If you bundle them all together as a percentage, then if you have a really good month, then you get paid more. And so does the unit owner. If you have a really bad month, then you get paid less. And so does the unit owner. And so it removes this concept of the unit owner looking at their monthly statement and saying, look at the check I got relative to how much my manager got, because they've got all these fixed fees. So you lose a bit in a quiet month, but you'll pick it up in a busier month, provided you set that bundling percentage at the right percentage. So it's aligning your outcome, or your goal, which is to make more money from your business and improve its value, with the unit owner, who's got exactly the same goal. They want to generate more income from their unit. Okay. Ultimately, it's creating a win-win outcome for both managers and unit owners. And again, nothing I'm talking about today is about deceiving your unit owners or taking advantage of them, or you're breaking any laws or legislation. It's really using the laws and the evolution of legislation to our advantage and looking to improve the relationship that we've got with our unit owners. So to sum up some of the advantages on bundling, simplicity is a key one. You're differentiating yourselves from your competitors, and particularly from outside agents, making it difficult for unit owners to make a comparison and form a view that, oh, I'll go to the outside agent because they're cheaper, because you're not comparing apples and apples. You're removing, and importantly, removing the need to increase charges every year. Think about Foxtel, for example. Their fee goes up every year, like clockwork. But I can guarantee you, not all of you go right to your owners and say, I need to increase Foxtel every year. And invariably you don't. And so your margin on maintaining that service gets diminished over time. If you've bundled Foxtel, then it then falls back on you. If you can increase the turnover of your property, then you're going to increase the revenue that you generate from the Foxtel. You're going to get a pay rise on that charge. You're going to get an increase on that charge. And the unit owner's not unhappy about that because they're getting a better return as well because you've increased the property, the turnover of the property. So it creates that win-win where you're both working together to achieve a better result. By bundling, we remove this uncertainty which I've spoken about, particularly around advertising charges and also any risks associated with the credit card income and also the risk of losing internet and PABX. There are some risks or disadvantages. The big one, as I see, or the advice I get from clients is, any time you want to talk to unit owners and talk about fees, there's a risk that you've got to have this uncomfortable conversation, a risk that maybe they'll get upset with you and use an outside agent or whatever the case may be. Really, you've got to just face it head on. Have an open discussion, an honest discussion with your unit owners, and you can absolutely get over that issue. There is a risk by bundling of increased volatility, as I've mentioned. As your profitability goes up, your income goes up. But if you take a fixed charge and you express it as a bundled percentage, when the income of the property goes down, your share of the income in respect to those bundled items also drops as well. So there's going to be a little more volatility in the outcome of your business profitability from year to year. If you're concerned about that, then absolutely take the cleaning and take the linen out of the bundle. They're the big ticket items, the ones that will really impact volatility. The smaller items, it's more about shoring up your income from your merchant fees and your advertising, and you're not so concerned about that volatility. Okay, so where to now? Really, that's the case for bundling, as I said. I'm quite passionate about it. I spend a lot of time thinking about the concept. We've now implemented it, as I say, with dozens of our clients with a strong success rate. Not 100%, but certainly over 90% of our clients where they've been committed and we've worked with them on the bundling process, have completed the process and got 100% engagement into bundling. I put it to you all that you need to consider your position in your business and how bundling might affect you with your charges to your owners. Are there charges there that are simply redundant? Are there risks associated with the merchant charge that perhaps you're charging? Is there uncertainty around the advertising that you want to get cleared up? When are you planning to sell your business? It's an industry where really from the day you buy your business, you should be thinking and planning towards selling your business. And if you're genuine about selling your business and trying to maximise the return, which I put it to you all are, then you need to consider the benefits of bundling and the impact it may well have on the profitability and ultimately the value of your business. Start planning now. It's not compulsory, it's not for everyone, but in my view, you're crazy not to consider the opportunity to bundle. I'll finish up just with a final slide, just a few tips while I've got a captured audience and you're not going anywhere until I've had my say. Importantly, one of the underlying themes to today's presentation is really to be prepared for the challenges facing the industry. They're not insurmountable, but the industry is evolving. Technology is evolving, and you need to evolve with it. I gave the example around marketing. What was happening 5 or 10 years ago just is not relevant today in a market where you've got these online travel agents. You can try and resist them and cut off supply to them or whatever it may be, but you're cutting off your nose to spite your face. Essentially, you need to be working with them and understanding how they work and how to get the best return for them. One of the things that has occurred to me over my career working in management rights is often what I find is a practice in a particular property wasn't necessarily the practice developed by the current operator. It wasn't necessarily the practice developed by the previous people or the ones before them. It may have been a decade or more ago that certain processes or practices within that particular property, the way you charge, the services that you provide both to body corporate and unit owners, have been developed 10, 15, 20 years ago, and they're just no longer relevant. Just because it was a practice that was in place when you bought the business doesn't mean you have to stick to it. You have to stick to the rules legally, but open your mind and look at what opportunities are out there, particularly taking advantage of changes in recent legislation. A word of warning around the Office of Fair Trading. Bundling and the concept that I've presented to you today absolutely is legal and within the bounds of the current legislation. No issue at all. But deviate or get it wrong, and potentially you might have issue with the Office of Fair Trading. I have a team of auditors who look after all our clients' audits, and I'm not sure of your experience, but certainly in the last 3 to 6 months we're seeing increased audit activity. It used to be the case we'd prepare an audit report and there might be a little exception. The month end wasn't quite completed on the last day of the month, or there was a owner's account overdrawn for a period and it was rectified within 30 days. We commonly note those exceptions in an audit report, and historically we didn't hear boo back from the Office of Fair Trading. We weren't even sure whether they were reading the audit reports. Today they're absolutely reading the audit reports, and they're coming back asking questions and threatening penalties and so on. So that audit function and the way you conduct yourself around the trust account is all the more important to make sure you get that right. Become more transparent with your charges. I mean, I've had people say, "Oh, bundling, it's smoke and mirrors, and you're taking advantage of the unit owners." No, you're not. What other industry do you know where you segment every element of what you do as a different charge? It's like going into a pizza shop and ordering a pizza and paying separately for the ham and the pineapple and the cheese. We've got charges for this, this, and this. Ultimately, you're providing a service. The service encompasses a whole range of things, and it's natural to bundle them together. You want to pay a fee and get the pizza. You want to pay a fee and get a property management service. It's not a new concept. Importantly, don't overlook the impact of GST on your calculations. If you're doing the calculations to bundling yourself, be mindful of how GST fits into the calculation. Ensure it's correctly reported on the schedule of charges. And ultimately, you're future-proofing your business. And what I mean by that is you're putting a process in place today, particularly around those redundant items like PABX and internet and telephone charges and so on. You're capturing those in a bundled percentage that will be there next year and the year after and the year after. And every time you or the property manages to increase its total revenue, that charge will create an increased return without you having to go back and engage with unit owners asking for an increase in your fees, which is a perfect outcome. So one final comment as a free gift to you all from Holmans. We've been working on and released an app which you can all access through Google App Store, I think it is, Microsoft App Store for both your iPhone and smart devices. Download the app. There's a range of financial tools on there, things like calculators to work out lease payments and interest rates, income tax rates. You can calculate what your taxable income could be. There's a logbook calculator. You're aware every 5 years you've got to maintain a new logbook for your car. There's a GPS linked app in there that'll do all that for you. Access to financial reports, share market indexes, the whole bit. So feel free to download the Holmans app, and I trust you all enjoyed the presentation.
We might do some questions for those that are brave enough to ask that in front of a crowd.
Yeah.
So anyone got some questions for Tony?
Yep.
Just before we ask those, I'll put the mic on here so that we get that for everyone.
Thank you. Cheers. Yesterday, Damien made a point of saying that the big four banks are really quite concerned about bundling, and I think from what I gathered was the actual lack of transparency, where they like to get into the figures and they cannot do so. So how would you respond to that?
Yep, good question. Interestingly, I haven't observed any concern from the big four banks. I've seen concern from one bank, which is not one of the big four, which in my view is simply a lack of understanding on their part. I understand this. There already are properties out there that are completely bundled. That is, they're charging a flat percentage for all of their services, 45% plus GST. What do the big four say about that? How are they going to be able to analyse that relative to a more traditional schedule of charges? The reality is that I don't buy into that issue. I haven't heard it from any of the big four banks. We've been preparing P&Ls for bundled properties now for 18 months, and I haven't had any pushback from a single bank. There was some discussion around it with some finance brokers probably 6 months ago. All the accountants in the industry got together just before Christmas and had a conference to talk about a whole range of subjects, including bundling. There are a lot of finance brokers and bankers there. None of the banks raised it as an issue in that meeting. So, yeah.
Thank you.
Anyone else got some questions?
Thanks, Justin.
I asked Damien yesterday, and I'm not quite clear, that we have the old PAMDA forms, and we could increase a rate by sending notification out to the owners, and they'd sign. Well, it was discussed whether they did have to sign it or whether our notification was sufficient. Now, if we want to increase the rate of the PAMDA form, does that mean we can't do it that way? We've got to do a new Form 6?
That's exactly right. So when the new legislation came in on 1 December 2014, what it said is that your PAMD 20A form will remain relevant forever. That is, there's no expiry date on the 20A forms. However, if at any time you change any of the essential terms of that agreement, then you must move on to the new platform, the Form 6. And an essential term includes the schedule of charges. So I know there's a lot of properties out there still got Form 20As in place, have increased the schedule of charges and haven't moved their owners onto Form 6. Potentially you're running a risk of issues when you go to sell, but also potentially there's an opportunity for unit owners to come and contest those charges because they're not legally or you're not legally entitled to charge them on what would then be a redundant form.
Now, the Form 6, if you increase the charge on that, what's the process? You don't have to do a new Form 6, a new contract?
That's correct, yep.
So you just notify the owners that there's an increase?
Yeah, it depends on what process you've got in place with the unit owners. Best practice would be to send them a letter with the new schedule of charges, introducing the new charges and explaining them, and ideally, in my view, have a spot down the bottom of the schedule of charges asking them to sign and send back acknowledgement that they've received the form. You don't legally have to do that. There's been some court cases on that issue, and what the court looks at is simply by issuing a month-end statement with the new charges on it amounts to acceptance by the unit owner of those new charges. To me, that's a little bit cute, and if it was me running the property, I'd want to front foot it, send out the schedule of charges, get them to sign it, or at least come back with an email acknowledging that they accept it.
Thanks.
Any other questions? So, Tony, I had a couple of questions yesterday,
Yep.
and I thought I'd ask the same ones. What's the most significant change that could happen in the industry, or that you see happening in the industry, that could affect a decision to bundle or not bundle?
Yeah, good question. Yeah, I've talked about this morning a number of evolution items within the industry, particularly around advertising and around merchant charges. Those issues aren't going away. So, in my view, an approach that looks at bundling those items will future-proof, as I mentioned before, those particular items. Probably the other big elephant in the closet, so to speak, is what's happening with online travel agents, and particularly Booking.com and Expedia, and how they're impacting. In my view, that's a separate issue to bundling. Ideally, you've got a separate notation in your schedule of charges, which deals with online travel agents and your ability to charge that fee to your unit owners. Essentially, it should come out of the gross revenue. That's really important that you've got that in your schedule of charges. And really, everything I've talked about in terms of bundling is after taking that OTA fee out of the gross revenue. Important when you're calculating your bundle percentage. I went through the process of that you're looking at a bundle percentage on gross revenue net of online travel agent charges. So it's a bit off topic from bundling, but certainly one we're all used to talking about and passionate about. My advice in terms of OTAs is to embrace what's happening there. You cannot resist it, and certainly many of my clients have got great success by working with Booking.com and Expedia, understanding how they work and looking to increase their rankings on Booking.com and Expedia, with a key outcome that once you've got the booking, that you sell the guest on a direct booking next time round.
Thanks, Tony. I think you touched on what was to be my next question, was how you saw the impact of the pending duopoly between Expedia and Booking.com could affect the industry. What's your take on the sustained level of low wages growth that we've seen in Australia, and how that could impact on a decision to bundle or not bundle?
Yeah, it's an interesting one. I mean, the labour costs in management rights relative to gross revenue of a property is relatively low. I mean, in holiday terms, it's predominantly around cleaning labour costs, and most cleaners, like it or not, are paid at or around the award rate, which essentially is underpinned by by the award and will tend to go up each year. So I think real labour costs have gone up by less than what award rates have gone up, simply because there's mechanisms in place automatically to increase award wages. If you're not bundling cleaning and linen, then there's probably no issue. Thinking about it, if you are bundling cleaning, particularly, you've got a big labour component associated with that activity. If labour costs remain low, well, happy days. You're picking up an increased margin. I guess the risk that you're taking with bundling cleaning, as I mentioned in the presentation, is you're locking it in as a percentage, and depending on the outcome of how the property is performing, and particularly around the rate that you're getting. If there's a drop in the average rate you're getting for selling your apartments, then that's going to squeeze your margin, and it's going to squeeze it more as labour costs increase. Okay, so, and that's why I say, caution around cleaning and linen. There's good profits to be made in that area of your business, and there can be better profits to be made under bundling, but certainly you can go backwards if your performance of your property declines over time.
Thanks. One thing I thought of on the way in, I was listening to the news, and up north's getting a drenching at the moment. We've got plenty of clients that are going to be watching the video that are based up north. How does a decision to go bundling affect a client who's incredibly seasonal, such as our Cairns or Port Douglas clients, where throughout the wet season they might be extremely quiet, yet through the beautiful winter period might make 80% of their money?
Yeah, really good question, and it comes back to the point I made about you really understanding your own business and how it operates. Certainly up north and elsewhere, we see a lot more seasonality, particularly around the weather, which can influence dramatically the turnover of the business. And if you were to do a complete bundle, then absolutely your business would be up and down dramatically with the seasons, no question. But having said that, I would suggest properties in those environments where there are significant seasonality, who have a large component of fixed costs, have a far greater concern from their unit owners, a lot more unhappy unit owners, seeing in those quieter months how the property's actually reaping greater rewards and getting a bigger check than the unit owner in those quieter months. So the concept of bundling will deliver essentially to the management rights operator a lower return in the quieter months, but a higher return in the busier months. Over the full 12 months, all things being equal, and assuming the percentage has been calculated correctly, the return to the business will be identical, assuming the business performs the same way. It's just you're going to have bigger peaks and smaller troughs, if that makes sense, but you're going to be more aligned to the returns that the unit owner is getting. So partly I see it as a positive in unit owner relationships. You can demonstrate to the unit owner, this was a tough month and we suffered along with you. And yes, this was a good month and we benefited along with you. It's a more happy conversation to have with your unit owners than them seeing a statement where you're getting the lion's share of the take for a particular month, particularly in quieter months. So that's the benefit. The risk is you're going to have to be more attuned to the cash flow of your business. You're going to earn less in the quieter months, and so you need to make sure you've got plenty of working capital to get through those quieter months, and that's going to be topped up in the busier months. So all things being equal, I think bundling in very seasonal environments still works and can work well. It probably just takes a little bit more planning.
Right. Anyone else got some questions? Yep.
Thank you. It's a question for you, Justin. Okay. In transitioning from non-bundling to bundling, how difficult is it to adapt software to accommodate that change?
So for those of you that didn't hear, it was how can you adapt the software to change from non-bundling to bundling or vice versa. Should hold this up a bit higher. We've had clients that have gone with 50% of their rent roll to go with bundling and remained the other 50% outside of bundling. You can configure it any which way you want to. One of the advantages that you might not be aware of is to be able to link that to a portfolio. And if you link the various properties to a portfolio, you can run your management income reports per portfolio. So you could essentially start to have a look at the income that you're earning from bundled properties to the income that you're earning from non-bundled properties with your management income summary reports completely isolated. We've got clients that are set up way more complicated than that, and the software handles it, so it's no problem.
Can I ask questions to
Yep.
and to you?
Yes.
Can you set up, you know how you do it, like just a percentage charge on bundling?
Yes.
Can you set that up when it goes into your income statement, that it splits it up into like advertising, PABX and all that sort of stuff? Would that do it automatically, or do you?
So just to clarify, the question is that you want to charge a fixed amount to an owner, but when it appears to the manager, it breaks it down into a portion to certain account codes?
Yes.
No. Yep.
No, and if I can just jump in there, my argument would be you don't want to do that. You want to get away from the concept of having separate charges for advertising and merchant fees and so on.
When we entered into MyO, into our current accounting software, we split it up.
Okay, so just so that the video can hear that, the question up the back was, when it gets entered into the general accounting program, the income is typically split up, and that's why the question's been asked?
Yep. So the concept of bundling is moving away from that chart of accounts. So no longer would we separate advertising and merchant fees and so on in our chart of accounts in MyOb. We'd just have one revenue item in MyOb in respect of all of the bundled items simply shown as bundled income, or indeed, again, you call it what you will, administration and promotion levy, one figure. I've had it's a little bit of a mind shift to get your head around how it will look post bundling. I've had people say, well, how will I work out whether I've spent all my advertising money after I've bundled? My response to that is, you don't need to. How do you work out your profit on your cleaning or your linen or anything else? You're not concerned about that. It just forms part of your consolidated revenue.
I think the biggest takeaway for me today was something that is evident, has been evident for me on support, for just regular support, particularly where a manager takes over a new building. Why are you doing it that way? Oh, that's how the old manager did it. So that's one of my takeaways for today. And I can see that one of Tony's arguments is to take a good look at your business, the circumstances that are surrounding your business now, today, the environment that you're operating in today, and have a look at if the structure of your fees and charges is appropriate, because it is true that a lot of the fees and charges are very old and are based on circumstances of 10 to 15 years ago, and that's true for businesses that are settling today. So that's one of the takeaways I had from today. The other takeaway I had from today was in relation to verifiable income. And Tony's making a very strong argument about what is and what isn't verifiable income. From someone that should know, a bundled service fee, I think Tony made quite a strong case that the income's there, it's verifiable. What the expenses are associated with that are less relevant in terms of verification. That money is there, it was earned, and therefore there's a multiplier associated with it, and that was another takeaway that I had from today. some of the, and the third takeaway that I had from today that I wish came up yesterday as well was that there are some fees that are charged that are old school fees, or and the best example of that is postage and petties. And there are some revenue streams that did exist some time ago that were very important revenue streams that no longer exist today or are being phased out, and the example of that was the PABX revenue. We did have a question up the back, so I'll just repeat the question to save me coming up there.
Sure.
Yep.
We'll be going into a new complex, and this could be relevant to other people. However, so we don't think there's bundling, and if we do go into bundling with the new owners and we talk to them, from what you've actually said today, Tony, I was thinking, is there 3 reviews you could give to your owner? For example, 1 is 100% bundling, 2 there's this percentage and that's what's in this bundling, and number 3, choice, and you've got this in your bundle as well. So there's 3 different bundling options that the owner could choose. Because there's different people out there.
Yep.
One might be an analyzer, another one might be, just do it all for me.
Yeah, so the question was, would I propose a number of different bundling options to my owners if I was considering reviewing my fee structure with them?
The short answer to that is no. You should, for the purposes of your business, consider the options and work out what is going to work best for you and for the business, and what is going to be the best outcome for your unit owners as best you can tell. So you'll have different, unit owners will have different views on it, but you need to make the decision and put absolutely only one option to the unit owners, the one that you think is most likely to get acceptance from the unit owners and is going to produce the best result for you. Absolutely, the software can handle multiple different variations of bundling, but it does really overcomplicate your world, and you're going to have a very detailed chart of accounts because you've got to deal with a bundle percentage for some unit owners and a different percentage for others, and then the traditional charges for others. It's going to end up in a mishmash. The vast majority of the bundles that we've worked on, we've sought and got 100% buy-in to one bundle percentage, and that, in my view, is the absolute best outcome.
I think this comes down to a concept of value as well, and you don't operate in a monopoly. There are outside agents that are, and some of them doing a very good job of securing bookings, but it comes down to the concept of value. And if we can demonstrate that our fees and service schedule represents value, and particularly of being that on-site manager and the care factor that goes along with being able to immediately resolve issues, then that can be part of the overall conversation of the bundling, is the value prospect that you offer to your unit owners. So I think that there was something else that came from today, a conversation and a partnership with the owners was a theme from today as well. Any other questions? Tony?
Oh, just one observation. We went from the simple bundle to the 100% bundle.
Okay.
And there was less pushback on the one-night stays. And we found over a 12-month basis, our occupancy went up by 3%.
Yep.
And our profitability went up by $8,000.
So just to repeat for the video, Tony here went to a bundled option and had less pushback for the one-night stays, had an increase in occupancy and an increase in turnover as a result. So I think this is highly relevant. Some of you have had a traditional 1 week or 4-night stay type minimum. Why? Because that's the way the manager before you used to do it, or perhaps that's the way the unit owners are used to it. Particularly if we're seeing an increase in visitors from countries, particularly Asian countries who don't have that many holidays, their length of stay is typically a lot less And there's an example of changing market conditions that might not be in tune with the way your business needs to operate today. So that's an interesting insight. Thanks for sharing that.
Yeah, great example of one of the potential outcomes, and really a common issue and cause for concern and disharmony with unit owners is around one-night stays and the revenue that you get from the clean and the linen, and what's left is a few dollars to the unit owner. Barely pays the maintenance on the unit, let alone the levies and their interest on their loan and so on. So great way to engage with unit owners and get a win-win outcome. And really that outcome comes from understanding your business, who your clientele are, in that case what your average length of stay is, and doing your calculations. I gave a simple example of how to calculate a bundle, but it can get more complex, and you really need to understand your business and how it operates to make sure that the bundle is going to work for you. In that case, obviously as a business owner, you're happy, your business is worth more money. I would assume, or in fact you've stated, that your unit owners are happier as well, and it gets back to the point I made about finding a win-win outcome with your unit owners. So well done.
One of the other things that we found was owner stays. So we charge the owners a cleaning fee and also a daily charge.
So I'm glad you've asked that. Yep. So just to reiterate for the video, how does the concept of bundling work where there's owner stays, where there's no revenue from the owner stays, but there are expenses that were traditionally levied as a dollar figure?
Yep, so you'll obviously have a separate charge for that, as you probably already do. Most operators will have a policy around owner stays, and you'll have a particular charge, whether it's the current cleaning charge or some other discounted charge for your unit owners to stay in their unit. You'll have a side policy, if you like, on that particular issue. Obviously you can't, if you've bundled everything, there's no revenue, but there's a cost to clean on an owner stay and provide linen. So that would be a separate charge, and often it's at or around cost, as a bit of a bonus, if you like, or gift to your unit owner.
I often talk about managers having a policy of who can participate in their letting pool for those who are brave enough to go down that path. In the early days when we were developing EasyRes, there was a 3-bedroom walk-up in Surfers Paradise, and they had some problems with their owners doing a redevelop of their apartments. They were old. And it got to a point where it was massively impacting on occupancy because no one wanted to stay in those apartments, but they were beautifully sized in a great location. And in the end, various owners agreed to it, and the manager made the brave decision of taking out of the letting pool those owners who didn't participate in the refurbishment program. The point that I make here is that if you're brave enough, you're able to say to your owners, what are the terms and conditions of participating in my letting business? And that could be a restriction on the use of their unit. It could be a commitment to partake in a refurbishment program. It could be a commitment to a one-night stays. It could be that we're going to review our fee structure, and this is how we've decided in conjunction with our accountants to run our business. Now, I always say the qualification there is those that are brave to do it, and some people aren't in a position to be able to do that. It affects multipliers, it affects an ability to sell and so on, but I know that particular complex, their occupancy went up by 25%. He worked less, and then he talked to his owners about a queue to come back into the letting pool, and it worked a treat. So I would imagine that you still have to charge a fee for the owners that come to stay to cover those costs, because you can't, 45% of zero is zero. But I think it opens up what has got me thinking about today's presentation. It opens up the opportunity for us to have a proper discussion with our owners about what participating in your business means, not just the fees and charges. But But I'm really glad you asked that question. I wish that came up yesterday as well. Anyone else? Okay. Well, I know that Tony's going to hang around for those of you that have a question you're not brave enough to pose to the group, or even if it's just something of personal nature, Tony will hang around. I think it's a big deal to have someone the calibre of Tony put in so much time to come and present to all of us at no charge, and particularly seeing as though he was in Melbourne last night and has a young family, I'd imagine.
Oh, dear. Yeah.
So it's a big deal. Thanks a lot, Tony. Really appreciate it.